Welcome to the Deep Dive. We're here to cut through the noise and, well, get straight to what really matters in the world of finance and business.
Yeah, exactly.
Today, we're taking a close look, a deep dive, into the Q1 FY26 financial results for 5paisa Capital Ltd. They're a pretty significant player in the Indian financial services scene.
They certainly are.
And our mission, as always, is to pull out the key insights for you, help you quickly understand what's really going on behind all the numbers and the jargon.
Absolutely. And to do that, we've gone through their official financial statements, the management's commentary, and also those detailed performance presentations they put out.
Right.
So you get a pretty comprehensive picture looking at performance, strategy, the market context, everything for the quarter ending June 30th, 2025.
Okay, and here's where it gets interesting right off the bat, doesn't it?
Yeah.
Because while 5paisa, they're reporting some strong growth compared to the last quarter.
Yeah, QOQ looks good.
If you look year over year, the picture changes quite a bit. So let's unpack that. Let's figure out what's really driving these figures.
Okay, let's start with those positive quarter-on-quarter numbers for Q1 FY26 compared to Q4 FY25, right?
Yeah.
Total income reached $778 million. That's up 9%. Profit after tax, PT, that jumped 15% to $115 million.
Okay.
Profit before tax, PBT, also up 15%, hitting $155 million. And total comprehensive income, same story, 15% increase, $115 million.
And EPS.
Basic earnings per share, EPS, that also saw a nice lift from 3.22 to 3.70 quarter over quarter. So yeah, on the surface, looks like a solid rebound.
It definitely sounds like strong growth on that basis. But the crucial part, as you hinted, is connecting this to the bigger picture.
Yeah.
How does this stack up against the same quarter last year, the year-over-year comparison?
Right, and that's where you need that vital context. So that $778 million in income, good QOQ, yes, but it's actually a 24% drop compared to Q1 of FY25. Back then, income was $123 million.
Wow, 24% decrease.
And the profit after tax, that story is even, starker. This quarter's $115 million of PT. That's down a significant 42% from the Euro 201 million they posted in Q1 FY25.
42%.
Yeah. So it really puts things in perspective. When Gaurav Seth, the MD and CEO, talks about Q1 FY26 starting on a strong note.
He means strong compared to the previous quarter, not the previous year.
Exactly. He's specifically referencing that recent quarterly rebound, not the annual trend, which, as we see, showed some pretty clear declines from last year's performance.
That's a really critical distinction for anyone trying to get a true sense of the company's health. So what was the management's reasoning for this Q1 rebound then? What factors did they flag up?
Well, according to Mr. Seth, the stronger quarterly start was down to a few key things. Easing global uncertainties, stronger domestic economic signals here in India, and just generally better investor sentiment.
Makes sense.
He pointed specifically to the recovery in the Nifty and Sensex indices, India's main stock benchmarks. They bounced back, rising about 16% from recent lows.
Right.
And he also mentioned improved retail premium turnover volume at the exchange level. That sort of activity directly feeds into their quarterly numbers. So essentially, a more positive market vibe helped lift them up recently.
Okay, so beyond those top-line financials, what about their, core business momentum, customer numbers, that kind of thing? Are they still pulling in new customers at the same pace?
Good question. Their total registered customer base hit 49.1 lakh. For listeners maybe not familiar, a lakh is 100,000, so that's just over 4.9 million customers.
Okay, and that's up Q-a-Q.
Yep, up 2% quarter over quarter. Same growth for their total app users, also up 2% to 22.3 million. And the app rating seems pretty solid, 4.3 stars.
But hang on, there's an interesting detail here, isn't there? While the total base grew, the rate they acquired new clients actually went down.
Yes, good point. They onboarded 0.88 lakh new clients, that's 80,000 people. But that figure represents a 12% decrease in new client additions compared to the previous quarter.
So what does that tell us? Are they maybe, focusing more on getting existing users to trade more?
That's a very sharp observation. This dip in new signups, even while the overall base edges up, it could suggest a bit of strategic shift. Maybe growth is coming more from deeper engagement or activating dormant accounts rather than just pure acquisition volume.
Interesting.
And it's also worth noting their STP rate straight through processing, basically digital onboarding without any human help, it dipped slightly by 1% QOQ to 85.6%. Still incredibly high, shows their digital strengths, but a tiny dip nonetheless.
Okay, a subtle point, but important. What about trading volumes then? And other financial metrics that show how active these customers actually are.
Right. Well, the average daily turnover, the ADTO, that's really notable. It jumped a significant 17% quarter over quarter, hitting 2.25 trillion.
Wow, 2.25 trillion. That's huge daily volume.
It really is. Total orders were also substantial, 22.0 million, though the QoQ increase there was more modest, just 1%.
And on the investment side, mutual funds.
Yep, mutual fund assets under management, AUM, grew 13% QoQ. It's now at FY 173 crore. A crore is 10 million, so we're talking 15.73 billion.
Got it.
And their average client funding book, basically margin funding, expanded nicely too, up 20% QoQ to 3,122 million. What's quite interesting there is a low per client exposure, only around 19,643.
What does that suggest?
It suggests that this funding isn't concentrated among a few big players. It's spread widely across their customer base, which implies, more diversified risk.
That's quite revealing about who their typical active client might be. Okay, let's zoom out a bit. How does 5paisa's quarter fit into the wider Indian market picture? What's happening overall with investors?
Well, the Indian market just keeps showing incredible energy. In Q1 FY26 alone, there are an estimated 6.6 million new demat accounts opened.
6.6 million in just one quarter.
Yeah. A demat account, for those listening, is basically the digital account where you hold your shares and securities. Think of it like a bank account, but for your investments. That brings the total base in India to a staggering 199 million accounts.
Incredible numbers. And it's not just accounts being opened. People are actively participating, right?
Exactly. Look at the active clients on the National Stock Exchange, the NSE. That number has grown 2.6 times in just the last 5 years. It surged to 48.6 million by May 2025. So, despite market ups and downs, there's clearly a deep growing interest in direct investing in India.
Yeah, you can really see that shift.
And you see it in holdings, too. Direct holdings by individual investors in NSE-listed companies went from 8.4% to 9.5% over 5 years. By March 2025, the value was 39 lakh crore.
Which is roughly
about $468 billion US dollars. And if you add indirect investments, like through mutual funds, retail investors, individuals like you and me, now hold almost 20%, nearly 19.9% of the total market. That's valued at 81 lakh crore.
almost $1 trillion US dollars.
Pretty much. Roughly $972 billion. It's a huge chunk of the market driven by retail.
Okay, that brings us to derivatives. We know that's a massive area for brokers like 5paisa. The derivative ADTO growth has been, exponential, right? 85% CAGR over 5 years.
Absolute explosive growth, yes. But we did see a bit of a correction more recently.
What caused that?
It seems to be driven mostly by regulatory changes. Things like moving to weekly expiry for options contracts, changes in lot sizes, even adjustments to how transaction income is calculated.
Right, those regulatory headwinds.
Exactly. But what's interesting is since about February 2025, we've seen a pretty clear trend reversal. The volume started picking up again.
Why the turnaround?
Largely seems tied to that improved market sentiment we talked about, with the Nifty index bouncing back. It suggests that while regulations might cause some short-term adjustments, the underlying appetite for derivatives is still pretty strong, especially when the market feels more optimistic.
Okay, so given all these market dynamics, how is 5paisa positioning itself? What's their game plan, especially around tech and products?
Their vision seems very clear. They want to be the first choice platform for traders and investors. Simple as that.
And how are they trying to achieve that?
Mainly through tech and user experience, it seems. They highlighted several platforms. For instance, their NXT strategy builder that's aimed at F&O traders, futures, and options. It gives them ready-made strategies, analytics, basically tools for smarter trading.
And I saw something about pay later, more flexibility for clients.
Yeah, exactly. Pay later MTF. It lets clients use their existing shares as collateral to get more margin for trading, boosts their capital efficiency, gives them more flexibility.
Makes sense.
Then there's Live News, uses AI to curate real-time market news, even adds emojis for quick understanding, which is kind of neat.
Wow.
And for the tech-savvy users, the developers, they have this Xstream API AI assistant. It uses ChatGPT to help people integrate with their trading APIs more easily. That could really speed up fintech development using their platform.
They're also improving the core stuff too, right? Like mutual funds.
Yep. They mentioned a revamp of their mutual fund web journey, making it more intuitive, quicker to use. Plus, they launched the Trade Better community, a place for traders and investors to swap ideas.
And trading from charts, zero-cost APIs, lots of features aimed at active users.
Definitely. It all ties back to their growth focus. New features, better tech, integrating AI, looking at new markets, especially focusing on F&O. And trying to, well, monetize older clients, get them trading more actively.
And they're putting resources behind it.
Seems so. They highlighted that over a third, more than 33% of their entire workforce is actually in technology and product roles. That really underscores how central tech and innovation are to their strategy.
Okay, now we do need to touch on some important corporate governance items and other developments, specifically that income tax surge.
Yes, that's definitely something potential investors or anyone following the company needs to be aware of. The Income Tax Department conducted a search operation at their premises back in January 2025.
And the status.
Well, 5paisa stated they cooperated fully, provided all the information asked for, but crucially, as of their latest report, they hadn't received any formal communication about the outcome.
So the impact is still unknown.
Exactly. The impact on their financial results is undetermined at this stage. It creates a layer of uncertainty for sure.
It certainly does. Any significant changes on the personnel side? Leadership roles?
A couple of points there. Mrs. Namita Godbole, who was the company secretary and chief compliance officer, resigned. That was effective July 11th, 2025.
Okay.
And looking ahead, they appointed Dr. Surat Kumar Malik as an additional non-executive independent director starting July 8th, 2025. That appointment, though, is still subject to shareholder approval.
Right. And quickly, just their corporate structure and any mention of broader principles?
Sure. As of the end of Q1, they had 4 wholly owned subsidiaries. There's 5paisa PDP Limited, that's an RBI-registered NBFC, a non-banking financial company. Then 5paisa Trading Limited, 5paisa Corporate Services, and 5paisa International Securities, which operates out of IFSC.
And ESG?
They briefly touched on their commitment to ESG, environmental, social governance, mentioned things like employee welfare, gender diversity, cybersecurity, digital onboarding, which is inherently more environmental, e-waste management, and even tree planting initiatives.
Okay, so bringing it all together then, how should we think about 5paisa Capital's performance and their path forward? What's the core narrative here?
Well, to recap, you've got this strong quarter-on-quarter rebound in Q1 FY26 that seems largely driven by the improving market mood and their own strategic pushes in tech and products. But, and it's a big but, you absolutely have to see that against the backdrop of those pretty significant year-over-year declines compared to Q1 last year.
2 speeds.
Exactly. Plus, they're operating in a market that's seeing ongoing regulatory tweaks, and they have that unresolved tax inquiry hanging over them. Adds layers of complexity, doesn't it?
Yeah.
It absolutely does. So here's a final thought to leave you, the listener, with. Given these dynamic shifts in the market, in regulations, and considering 5paisa's own challenge of balancing that QOQ momentum against the URA comparisons, what strategic moves do you think will truly define their long-term position and, ultimately, their success in this incredibly competitive fintech space?